Good morning and welcome to Stock Market Today for Thursday, May 30th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with the show. Daily stock ideas for you to consider every day in your inbox before the market opens. Special thanks to the team at stockcharts.com for hosting this show in the 9:15 slot every day, as well as to the team at See It Market for publishing our work every trading day. U.S. equities ended lower in Wednesday's trading, but finished off the worst levels after finding support at the 200-day moving average. All sectors were lower, led by utilities and REITs. Materials and financials outperformed. Treasuries continued their recent rally. The dollar was stronger on the major crosses. Gold finished up 30 basis points, and WTI crude settled down 60 basis points. So again, while all sectors were lower, some did do less worse or less bad than the market. Materials, fins, and industrials in that group. Interesting that rates plummeted again, but utilities and REITs underperformed. As we get to the desk this morning, futures are trying to rally a little bit. S&P futures are up 40 basis points after U.S. equities were lower for a second straight session yesterday. Asian markets were mixed overnight. Both Japan and China saw pullbacks. European markets are higher this morning. Treasuries are weaker across the curve. Dollar is stronger against the yen, weaker against the euro. Gold down 40 bips. WTI crude up 0.5%. And here it is. Tag, you're it. We tagged the 200-day moving average yesterday, tried to push below it, and rallied to close back above. Test and hold the 200-day moving average. Support, 27.75. That's your 200-day moving average. If we break that, we're looking at 27.20. Now, 27.20 is not an arbitrary number. It would mark a 38% retracement of the move off the December lows to the May highs. For those of you who are interested, the 50% retracement would be 26.50. Resistance is near 28.50, then in the 2900 to 29.50 range. Will the RSI break back above 50? That's the key for the bulls. So far, we haven't hit oversold, so that's interesting. Has not been able, RSI during this pullback has not been able to push below 30. That is encouraging for the bulls. Now we want to see a break back above 50. Chaikin money flow turned slightly bearish yesterday, ever so slightly. If you squint, you can see it, but I put the arrow there. You can see it ever so slightly into bearish territory. So we want to see a stabilization in our indicators and a quick reversal as the market tests and holds the 200-day moving average. Hold the 200-day moving average, push above 28.50. I think you can start getting aggressive on the long side to play for the top of the range. Again, your market in a minute. What am I talking about? In my note to Chaikin Analytics clients, goes out every day. Hits your inbox by about 8:45 if you're a Chaikin client. Support of the 200-day moving average holds for the S&P 500. Short-term breadth metrics in your oversold level, so that's kind of interesting as well. We're going to take a look at breadth today, do a little bit of a deeper dive on it. Weakness has been more pronounced in global markets. I go into this in my note. U.S. has been the place to kind of hide out. It's been the less bad group from a performance standpoint. If we look at global markets, home builders are a leading group. They're now oversold and at support. And I go into detail on the XHB in my note today to Chaikin clients, and futures, as I said, do point to a higher open. Let's take a look at the power bars. Power bars have deteriorated. There's no doubt about that. Dow down 87 bips yesterday. 4 bulls, 5 bears. S&P 500, 87 bulls to 105 bears. NASDAQ, negative 16 bulls to 21 bears, slight underperformer on the day relative to the S&P 500. And then there's your small caps just, doing what they do lately, underperforming. 362 bulls, 406 bears. So all of the major indexes are skewed to the bear side. Bonds, nice rally, sent the yield down towards 2.2% yesterday. You've heard us talk about it for some time, where we think yields are headed. We've been saying it for a while. Path of least resistance is lower, and that theme has largely been playing out. According to the Chaikin Power Bar, small cap stocks and large cap stocks have turned bearish. All major indexes are bearish from a power bar perspective. Our stock of the day today, Triple S Management, the B-class shares, comes to us from the medical care group. Closed at 25.04 yesterday, down 48 basis points, so a bit of an outperformer. Ticker symbol is GTS, and it has a very bullish Chaikin power gauge rating due to very attractive financial metrics, very strong price volume activity, as well as strong earnings performance. When we take the 5 factors in each of these categories, 20 in total, we come out with a very bullish rating. Very bullish stock, strong trend, but a weak industry group. Let's take away the evidence approach and run through our analysis. Market and model are in agreement here. We've been bullish since about the mid-January timeframe, and we've been outperforming the market since early February for the most part. Intensity of that outperformance has picked up of late. Stock is oversold with bullish money flow above a rising long-term trend line and has triggered one of our proprietary buy signals today. This one is an oversold buy signal. So essentially what we're seeing here is we're seeing a stock that is in an uptrend. It's been an uptrend since December and is now oversold within the context of that uptrend. This is the type of setup that we look for. Industry bothers me a little bit, but we're going to take a weight of the evidence approach. I think if you're on the aggressive side and if you're looking for long ideas because you believe the market's going to hold above the 200-day moving average and begin to move higher, you can take a look at a stock like GTS as a long idea, and you can take a look at it here and now as it trips one of our buy signals. Take a look at GTS on the long side of the portfolio today. Sector tracker, looking at the movement of the major sectors over the last 5 days. All of them are lower over the last 5 days. But as always, we know the key is relative strength. Real estate, top of the list. Materials, a little bit of a counter trend move. I'm not impressed by materials, especially in light of what's happening with commodities. Now we have renewed strength in the dollar. I would expect that to put commodities under pressure, make it tough for a group like the materials to do well. Comms, financials, utilities round out the top 5 groups. Still a bit of a defensive feel, even with everything heading lower over the past 5 days. Healthcare, tech, discretionary, middle of the road. And what's interesting is those are your alpha sectors, really. Healthcare, tech, and discretionary are the groups you want to see doing well, because that's where that's what traditionally throughout history, those are the groups where the most alpha has been generated. Staples, industrials, and energy at the bottom of the list. You know how I feel about energy. We've pounded the table. Stay away from energy. Pounded the table. Bearish on energy. Pounded the table. We don't care that oil was going higher. The power gauge rating was bearish on energy. Still at the bottom of the list. Our industry in focus today, transportation services. Over the past 6 months, this subsector has underperformed the S&P 500 by nearly 9%. And its power bar ratio, which measures future potential, is very weak. In fact, there are 0 bullish or very bullish stocks and 18 bearish or very bearish stocks, and that firmly plants it in the bottom slot, number 21 of the 21 subsectors that we track. Now, some of the indicative names there, Macquarie Infrastructure, MIC, Air Transport Services, ATSG, as well as Alaska Air, ALK, all have very bearish Chaikin power gauge ratings. However, I took a look at all 3 of them because, I like to give you some ideas or potential ideas, both on the long side and the bearish side of the portfolio. All of these are oversold right now, so not that compelling. So we're going to take a look we'll do our analysis on the group, and you can see what we're talking about here. XTN is the transport ETF, and it has a bearish Chaikin power gauge ETF rating. So we run through the analysis the same way. Bearish rating, market and model are in agreement. Dynamic, duo, or in gear for this ETF. It's underperforming the market, and the intensity of underperformance has been picking up as of late. Group we want to avoid, group where we want to go hunting for bearish ideas when the opportunity presents itself. Now, the group is oversold, and money flow is actually bullish. Fund is below the declining long-term trend line. It looks to me like we're breaking below a near-term support level at $58. To me, you want to avoid the group. I don't see compelling setups for bearish trades just yet, just because the group is so beaten down. The group is oversold. A lot of the stocks within it are oversold. Let's avoid the trade for now, but certainly something to consider. If you're building a bearish watch list, this would be a good hunting ground to put names on that list. Trending names now. Yesterday's S&P 500 movers, shakers, gainers, losers. Helmholtz and Payne, bearish stock, up 3.5%. No real news there. We did get some crop updates. Looks like about 58% of the corn crop is planted. That's up from 49% a week ago. And that data, I guess, was better than expected. Led to some pop in the ag names. Deere went along for the ride. 2.59%. Seagate up 2.5%. CenturyLink up 2.5%, and Corvo, CRVO, up 2.2%. What's interesting to me is that within the weakness yesterday, semis actually were higher. and outperformed on the day. We're going to take a look at that a little bit later in the show. Capri, CPRI, that's the old Michael Kors, down 10%. And you're going to see a theme here. The weakness, this is investors becoming concerned that the tariffs are going to impact the consumer. That's my read on this. Capri, consumer name. L Brands, retail stock. Abercrombie and Fitch got hammered following their earnings. Took a lot of the mall-based retailers down with it. Down 7% for L Brands. Phillips Van Heusen, PVH, down 6.3%. Another retail name. Macerich. Macerich is a REIT. We've liked REITs. Macerich has been bearish. What's the theme here? Macerich is very exposed to the malls and the mall-based retailers. Down nearly 6% yesterday, and that's why it pays to dig in. Do the extra work. That's why I do it. I like REITs, but I wouldn't be owning Macerich. General Mills, GIS, caught a downgrade from Goldman Sachs, down 5.5% yesterday. So let's dive in. Short-term breadth metrics near oversold levels, and the operative word here is near. This is the percentage of S&P 500 stocks above their 20-day moving average, and you can see we have been plunging. So after a negative divergence with the S&P 500, market made a high up here. This group made a lower high, or this metric made a lower high, rather. Now we're heading down towards that 10% level that, we've kind of usually, if we go below 10% and then begin to rally back, that's tended to mark short-term bottoms in the market. So we are nearing those levels. Now, again, this is a very short-term breadth metric, right? Percentages of stocks in the S&P 500 above their 20-day moving average. But it's interesting that we're nearing that level as the market holds support at the 200-day moving average. Longer-term metrics are nearing support. Here are the percentage of stocks above their 200-day moving average. And what's interesting to me is look at where it topped out back last fall before falling off a cliff and then struggled there. It's been support. We're actually testing support. The indicator is testing its own support level as the S&P 500 tests the 200-day moving average. So the percentage of stocks above their 200-day moving average is testing support as the S&P 500 tests support at the 200-day moving average. Should this metric begin to round higher, that would be a positive indication for the market, especially if the market holds and begins to move higher from the 200-day moving average. So we're going to watch that closely. And this is all happening while the stocks outperformed yesterday. And here's that chart, semiconductors relative to the S&P 500. And what's interesting is we're bouncing from support. Right? Tested. It's an important level. Tested. Close. Tested. Chopped around here a little bit, pull back test. The ratio is oversold. This is the RSI of the ratio, so stocks relative to the S&P 500, all while the S&P 500 has tested and held support at the 200-day moving average. So that's kind of interesting to me. I think what we're going to see here is the market's going to attempt to rally from the 200-day moving average. Until we get through 2850, though, I think you have to treat it as suspect. But signs are there that we are oversold in the near term, and we could see a bit of a rally for the market. So what does that mean? What do you want to do with your positioning? For strategic long-term holds, do nothing, right? Those are your strategic holds. For your trades, I think you want to start to look for oversold names that have bullish and very bullish power gauge ratings that are in leading parts of the market. For opportunities on the long side, obviously you want to manage your risk. We always want to manage our risk, but we don't know if the market's going to hold, but we're going to just keep following our process. If you're targeting names that have been outperforming the market as the market has sold off, should the market hold and begin to move higher, you are in a position to do well. So you want to look at a name like MCore Group, ticker symbol EME. It's my bullish stock of the day in my note today. Very bullish power gauge rating, strong trend, strong industry group type of name we want to own. We're in agreement. Been on a bullish rating since February, been outperforming since about the March timeframe. Intensity of that outperformance has picked up. Look at what this stock has done. As the market has pulled back, this stock is merely consolidated. That is outperformance. Stock is oversold based on our overbought, oversold indicator. Chaikin money flow is bullish. Above a rising long-term trend line, type of name you want to own in this environment. Should the market stabilize and move higher, MCore is likely to outperform. Head over to ChaikinAnalytics.com/survival guide for my new note. I will be back here tomorrow. Have a great day, everyone.